Hello, my name is Connor and this is Seaball FX. Now essentially this channel is pretty much just for trading stuff. I'm not going to claim that I'm a professional trader because I'm not, but I've been in the markets for 3 years, and over the course of these 3 years I've learned a lot of things, and this channel essentially is me just sharing some knowledge and also growing as a trader myself and sort of documenting that journey as I go along. Obviously this is my first video, the quality will improve eventually, but for now this is what we're going with. So for this first video I'm going to be teaching you risk management, because risk management is one of the most essential things that you could know, even as a beginner trader who is just signing up to a signals group from some guru on Instagram. This is essentially the thing that is going to stop you from blowing your account with them, because essentially they are vultures and they want you to do that. But with this risk management plan, hopefully you'll be able to save yourself some money and save yourself from blowing some accounts. So essentially risk management comes down to a few things. What's your account size? What are you willing to trade? How many trades are you taking per day? And what percentage risk are you comfortable with losing? As a sort of rule of thumb, you should realistically only risk 1 to 3% per trade. So if you're trading an $1,000 account, you only want to be risking 1 to 3% of that at any one time. So if you are doing 1%, then you're risking $10, and if you're risking 3%, $30, etc, etc. And then obviously as you scale your account, these percentages can grow. So not only will you be risking 1% of a grand, if you then start to build that account, you can then put that 1% on top of that account balance that you've got. So essentially by only risking 1% per trade, you're going to be able to stomach a lot more losing trades than you would if you were risking 5%, 10%, even more. Or if you're even just starting with $1,000 and you're being told to trade with a 0.1 lot size, then that is completely stupid. You've got to make sure that you know how to find out what 1% is based on the pips that are in the stop loss. So if you've got 30 pips, then you need to work out 1% of those 30 pips and what that lot size would look like for your account balance. So I'm going to show you exactly how to do that. Now, as you can see on the screen here, this is My FX Book, which is really a good website to use, whether you're looking at the market news or anything like that. My FX Book, you can even track your own trading statistics on there. I'm not sponsored, obviously. I've not even got any videos on the channel, so that's just out the window. So essentially, what you've got here is a position size calculator, and this will allow you to work out exactly what lot size you need to use based on your risk percentage, which is here. So this might look a bit confusing if you've never seen it before, which is completely understandable, which is why I'm going to talk you exactly through the process of using it. Here we've got GBP USD, which is the pound to the dollar. As you can see here, I've got a couple of good trades, each with a risk to reward ratio. So here we've got a 4% gain trade, risking only 1%. So if we were to take this trade as an example, well, we can have a look at it and say, well, look, our stop loss is 28.1 pips and we're risking 1%. So now we know that, we'd come over to My FX Book, and as you can see here, we've got a currency pair section. Now all you need to do is just type in the pair that you're using, in this case GBP USD, and the account currency. So if you're trading in US dollar, Australian dollar, Canadian dollar, the Swiss franc, the euro, the pound, the yen, the New Zealand dollar, blah 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 blah, we could go on all day listing currencies. Now essentially what you need to do is just choose the currency you're doing. So just for example, I'll say US dollars, and my account size, let's say it's 1,000, and then for the risk ratio we'll put 1% in. You can also swap with money if you prefer to do it that way. It's completely up to you. And then stop loss, pips. So what you do here, 28.1. So you put in this box 28.1, and then all you need to do is press calculate, and as you can see here, it's telling you how much you're wanting to risk, which is $10 on the 1% of a grand. And then you've got your lot size here, which is 0.04. Now let me tell you, don't just look up what percent is for 28.1 pips on one pair and assume that it's going to be the same for another pair, because it's not. And I'll show you why, because each pair's got different pip values, which means sometimes a pair will move and you'll see more of a gain, and sometimes a pair will move and you'll see less of a gain. It all depends on that pair. So if we look on here, let's go to GBP JPY for example. We've got another trade here, which is one I did in June the 14th. We've got another one here, which unfortunately, as you can see, that hit stop loss. But for this trade, so we've got 23.1 pips and it's a 2.8% gain from there. So what we're going to do is look 23.1. So we go back onto My FX Book, type in GBP JPY, And now we have a look again, just to remind ourselves, 23.1. Calculate. And as you can see here, it's 0.6 lots, and the units are a lot bigger. So you can see that each pair sort of operates in a different way, and we'll get into more stuff like that in future videos. So essentially, yeah, if you were to take this to the live market and go onto MetaTrader, let's say for example you want to start trading live. This is a demo account, I must admit. I wish I had $100,000 to trade with. Now essentially, when you're entering the trade on here, if you've already organized your trade, for example on TradingView, then you can copy it across, but you just got to remember that sometimes there's slight variances in the price and the values just because of the different brokers. So here we have US 30, which is an indices, and essentially if we want to start a trade but we don't know how much to risk, well, what we can do is new order, and this is just as a prime example. Now let's go 0.5. So then if we say buy market, now what you can do is you can see this green line here, and if you drag this line, it shows you the dollars risk and how far you can put this down in terms of your account balance. Obviously we've got a lot of breathing room here, and we want to risk maybe about 1,000. So obviously with this account size, I could definitely scale up the lot size. This is another way of just working it out if you're just entering trades sort of live. There we go. So look, we can absorb quite a big move on this lot size, as you can see there. That's like 0.5 risk, but you see the point I'm trying to make. You can also do it on here where you can sort of put a trade on. Let's go a bit bigger for this one. Let's go 2, and we're going to buy again. And then for this, look, as you can see, price is moving a lot more. So now our range isn't as big because we've used a bigger lot size. So as you can see here, our stop loss is coming up to 1,000. There we go. Put it just at 995 to be safe. And then that has dragged our stop loss, so you'll be able to do that within MetaTrader itself, which is quite a handy thing to be able to do. So yeah, that's essentially how you would put these trades on if you was using MetaTrader. Now I'm not sure where price is going to go, but hey ho, it's a demo account anyway. So that's how you do that. So I hope this video has been of some use, because risk management, like I say, is very, very important. Because if you join a trading group and people tell you to put certain lot sizes on, you've just really got to be careful about the types of lot sizes that people are using and the type of lot size that you should be using. I've got to say honestly, if you're starting out with $500 or $1,000, you are not going to make $10,000 from that 1,000 in a year. You're not. You might at best be able to make another 1,000 on top of your 1,000. But with compounding, you can surely grow an account over the long term. So you've just got to look into these types of things, and this is what this channel is going to be for. I'm going to try and offer as much trading help as I can, because not only is it going to help you, but it is also going to further my knowledge in this space, and that is something I really would get a lot of fulfillment from. So yeah, thank you for watching, and I will see you in the next video where we'll discuss some more trading stuff. Thank you very much.